evening, everyone, and welcome to our first revision session of Financial Statements of Limited Company Level 4. It is a half an hour session. However, I just want to forewarn everyone here that it may take longer than half an hour today. As you may be aware, task 1 and task 2, it is really difficult to get it done in half an hour's time. So today's session is all about task 1 and task 2. The question is from your revision pack, which I'm hoping all of you have a copy of. However, if you don't have a copy of it, I'm going to put it in the chat box now, a link where you can find answers to all questions, links to recordings, and even how to register for future sessions. Without further ado, let's just dive in, team, and have a look at the question that we have in hand. So the question that we are looking at is task 1 and 2 of your revision pack. So if any one of you have had a chance already to have a look at this task, or tasks, shall I say, this task is about preparing a statement of cash flow, which I assume a lot of you love doing. So this task is about preparing a statement of cash flow and a statement of changes in equity. In financial statements paper, key things that you need to be aware of is the year-end dates. So in this question, the year-end date is given to us being the 30th of November 20x6. In terms of anyone who have not received an email with the task, I have put in the chat a link. I'll just put it in again, just in case anyone is unable to see the link. The link will give you details of how you can get a copy of the questions and recordings, previous recordings, and how you can register for other sessions as well. Okay, so in a statement of cash flow question, first key things that I would like to really reiterate is how a cash flow looks like. What are we trying to achieve by doing a cash flow? So what cash flow is basically is we have been given a profit or loss account, and we'll always be given a balance sheet as well. Our job is to look at these two statements and remove anything that is non-cash. Because what do we want to find out, or what do we need to be able to do, is get only cash items. So that is what we are trying to do in a cash flow statement. So what other kind of items are we going to look at? So in this question of Boost Limited, which is for, we've been given a statement of financial position as at the 30th of November X6. So that is my current year. So that means any of these figures are current year figures. What about 20x5? That would be my previous year. So here we've been given details of what happened in X5 and what assets and liabilities we have in X6, which is all good. And we've also been given a statement of profit or loss for X6. And what are we trying to do in a cash flow, as previously said, is take this profit figure that we have, which is always profit before tax. We are taking this profit before figure and trying and removing anything that is non-cash. So whilst I'm looking at this profit and loss account, I notice one item that certainly does look a bit non-cash to me at the minute is this finance cost. What about administrative expense? What about distribution costs? They may also have some non-cash items, but sadly, since it's all aggregated, I don't know what. What about cost of sales and revenue? Those again will have cash sales and will also have credit sales. And what are we trying to remove? We are trying to remove anything that is credit, anything that is not cash. So we've given some additional information as well, and we are told and we are asked in task 1 to prepare a reconciliation of profit before tax to net cash flow from operating activities. Okay, so all we are told here is start off from this figure of profit before tax and try and remove any items that are non-cash to get me my cash from operations. So what is finance cost? Finance cost is interest that we pay on any loans the company has taken. And that is what we consider in company accounts. We call that finance cost, i.e. interest paid. So we have been given this information. We are asked to do a reconciliation. So in other words, we are going to start. The first figure we are going to take is our profit before tax, which is £319,000. We have to do some adjustments and then find out what our net cash from operating activities is. We notice we have a workings box given to us as well. Remember, in task 1 and 2 of your paper, you will be given working boxes. It's not compulsory. It is not a must that you have to use them. However, if you do use them, the benefit is if your final answer is wrong, you will still get marks for your workings. So, in other words, my suggestion would be make use of the working boxes and type in whatever is required. We are also asked to prepare a statement of cash flow for Baboos Limited for the year ended 30th of November 20x6 as well. I.e., now that you found out your cash from operations, find out everything about investing and financing as well. So, question to everyone here. What does it mean by investing activities? What do you think investing activities means? If not investing, okay, perfect. I've got purchase of PPE. That is a type of investing activity. Buying assets is a type of investing activity. That is right. So investing activity is what the business is investing their money in. So a business, what kind of investments will they make? They'll make investments in purchasing assets, or they could actually buy shares in another company, like an investment. So those are investing activities. What about financing, do you think? What does financing stand for? Yes, perfect. Financing is how is the business making their money? How are they getting any loans, any share issues? Because when they do a share issue, what happens? They are giving someone a share, a piece of paper, and they are getting money. So with that money, they are able to buy their machines, they're able to invest in other items, and with that money, they can generate those cash flow that we get from our operations. And all of this, the key thing is to make sure whatever we have at the start of the year in cash and the end of the year. And that is what we are trying to explain. Why is my cash balance changed from X to Y? We are also given some more working boxes like plant and equipment. We are given some proceeds on disposal of PPE and some share issue box as well. So again, we will be using these boxes because what if our final answer is wrong, I know the marker, the examiner, is going to give me marks for any of my workings as well. So in a massive question like this, which on pages, on a printout page like the one that I have in front of me that expands into 2 or 3 pages, you can imagine if you're doing it on a computer and in the exam, how it's going to look. How are you going to keep a tab of everything that you're doing? What are you going to make sure? I have dealt with that, and you've made sure to ensure you've included all the required information. My tip would be to work through each and every figure one at a time. And when I'm working through figures from the bottom, I'm thinking about it. What am I going to do with it? And that is what I'm going to be thinking of here. So let's start off, go one by one per item and think about what am I going to do with it? Where am I going to put it? Okay, every figure that we notice here should be going somewhere or the other. Or we need to have an explanation of it. The first item that we see here is our non-current asset, which is property, plant, and equipment. Last year, it was £12,423. This year, it has now increased to £15,600. Looking at PPE, I do remember whilst I was scrolling up and down that I had a working note for it. So for anything that you see in your balance sheet, a good way to remember that what you need to be doing is always think about brought forward, carry forward, and things that make a difference in it. So thinking about PPE, if I started the year with 12,423, ended the year with 15,600 net book value, what are the kind of things, elements that you are aware of from your accounting units? What are the kind of items affect PPE, do you think? Depreciation, yes, indeed. What else? What else happens in non-current asset land? Disposal happens, purchase happens, revaluation happens. Spot on. Those are the kind of things that you need to be thinking of that would make your answers really easy for you. So yes, there's purchases. Yes, I can call that acquisition, revaluation, disposal, and depreciation. Those are the key items, key events that affects my PPE calculation. And that is basically what cash flow does. In fact, to be frank with you, I prefer cash flow than doing a full-on profit and loss and balance sheet. Because if you have done any profit and loss and balance sheet questions so far, you'll notice there are so many additional information to consider. Look at the number of additional informations you have here. Very few. And this will always be the case for cash flow questions. And that's why I like it. It's easier to deal with. And all I have to remember is when I look at items in my balance sheet, I need to be thinking about brought forward, carry forward, and the items that affect it. And that's what I'm going to do. So those two items that I noticed, PPE, I know I have to deal with brought forward, carry forward. I know there's a working box for it. So I'll go ahead and put the figures that I know in that working box. So PPE carrying amount, it says that in that box, I'll go ahead and put brought forward. And taking it from that page, that was 12,423. And carry forward, that is 15,600. I'll put that in as well. In fact, I'm going to put it at the bottom. Because there are other things that affect that figure. For now, I'll put that in. Okay. Then I'm moving down to current assets. Now, current assets, they are what we call as working capital movements. Because in your mind, you need to think about, get a picture of how a cash flow statement or a pro forma looks like. So cash flow, as we were talking about, talks from our profit and loss account and our balance sheet. It is first looking at our profit and loss account. And in our profit and loss account, when I look at this, we said we're going to remove any non-cash items. One of the obvious ones we said was finance cost. But we said there would be some in distribution and administrative. We've not been told, we will be told that later on. But what about this credit sales? What about this credit purchases that goes in cost of sales? Sadly, we are not given that information. So the way we work that out is we look at what affects credit sales and what affects credit purchases. And the item that affects credit sales is receivables. And the item that affects my cost of sales is payables and inventory. Because remember, closing inventory goes in there. So what I do is basically look at my inventories, my receivables, and my payables. And the way we work it out is in a very different manner. What we say is, I had last year, again, brought forward, carry forward difference, 163. This year, my inventory has risen to 189. That is an increase of 26. So inventory has increased by 26. What is this doing to my cash, you think? If you have an increase in your inventory, is it a good thing or a bad thing? It's bad, isn't it? Yes, it's bad. If you have too much of inventory, it's a bad thing. So that is basically saying, if it's bad, it's negative cash. And what we do is we take that 26 and we show that in our net reconciliation of profit before tax to net cash. We leave a few figures, lines for doing all our non-cash items. And what we show after our non-cash items is a working capital movement. And a working capital movement, one is the increase in inventory. As we all agree, that is a bad thing. Increase in inventory is a bad thing, therefore that is a negative 26. More inventory, that means you have to sell things. You still have things that you've not sold, you've not got the cash. That's bad. Now that I've taken care of inventory, I'll go to the next item, which is receivables. Again, as we said, we're doing a brought forward, carry forward calculation. So I'll look at my brought forward, 2201, carry forward is 2,500. Again, this has increased, and that's increased by 299. An increase in receivables, is that a good thing or a bad thing? It's bad, isn't it? Yes, it's bad because that means you've not collected money from people. You do not have that cash with you. Less cash. Therefore, that again would be a bad thing. And since it's bad, I'll put increase in receivables as a negative as well. Okay. So now I'm dealing with each and every item in a methodical manner. Why am I doing it? So that I can ensure I've considered everything and I don't miss out on any item. Now we come to cash and cash equivalent. That is exactly what we are trying to prove here. We are trying to prove why has my cash, which was 423 in X5, increased to 658. So those two figures go at the bottom of part B, where I have cash at the beginning and cash at the end of the year. And whilst I'm here, I might as well do the difference between the two, which is 235. Get the easy marks first. So cash and cash equivalent, done. Now moving down, I've got share capital, share premium, and retained earnings. For share capital, share premium, I did notice there is a box for it called share issue. Does anyone know what is the double entry for share issue? Let's say your shares were worth £2 and the nominal value of the shares is 50p. If that's the case and you sold one share, what would be your double entry for it? Because double entry is really important for cash flow to understand why we're doing what we're doing. What's the double entry for issue of shares at £2? You've got £2 cash. Any idea? Perfect. Yeah, cash coming in, debit cash, £2. Remember, share capital, when you do credit share capital, it will always be nominal value. So the nominal value of share is 50p. That means anything extra I've received goes in share premium. And the reason why I asked you for that double entry is because that's going to help you think about the box that we're going to fill in. The box we are going to fill in is our share issue box. So that says, okay, I will have to take into consideration my share issue as share capital and share premium together. So here when I do my calculation, I'll have brought forward, which is going to be 12,000. That's my share issue and share capital and my share premium together, and my carry forward 16,000. And that takes care of these two as well. Retained earnings, that's an accumulation of profit. So that one we will take into consideration when we're dealing with our profit figures. So that will be sorted out with our P&L. But something's happening in loans. I had last year 1,000. This year I have 800. And notice there's no working box for it. What do you think has happened with loans? Why is that loan reduced? What could be the possible reasons for loans reducing? Paid loan, exactly. You must have paid loan. That's why it must have fallen down. So that reduction in loan, remember, loans are financing the way as a business finances their work, their operations. Therefore, loan is part of my financing activity. So I'll put in there, loan repaid. And remember, that's a loan that I have repaid. So money going out, 200. And that is crucial in cash flow questions of knowing what you're doing. Is money going out? If out, it's a minus. If it's in, it's a plus. That deals with loans. We said trade payables is part of my cost of sales. So that should be part of my operations. So here again, when I look at the figures, I notice my payables has fallen down. So that has fallen down by 262. What do you think it is from a cash perspective? Is that a good thing or a bad thing? Is it a good thing? No, it's bad. If you pay, it's good from the supplier's point of view because they are getting money. So from a supplier's point of view, it's a good thing. They are getting money. However, from the business's point of view, from a cash point of view for the business, I'm afraid that's a bad thing. Money is leaving us. So that is bad. That means that's going to be a negative 262. If you're still struggling, team, in understanding what am I trying to do here, why am I saying good or bad, if you're still struggling to decide that, an easier way to remember it, well, you decide which one is easy. What do you notice? An increase in my assets causes a decrease in cash, i.e., assets have an inverse relationship with cash. Whereas liabilities, what do you notice? A decrease in payables leads to a decrease in cash. That means liabilities have a direct relationship with cash. Again, it's more of understanding. So I would go more in the learning way of increase in inventory from a cash point of view. That means I have not received enough cash for selling less items. Therefore, it's a bad thing. Decrease in payables. That means I've paid too many people. My cash has reduced. Therefore, it is a bad thing. Okay. That works quite well because there you are understanding what you are doing. Tick, I have dealt with trade payables as well. The next item is tax liability. I do notice I have a working note for it, so I'm going to put the figures in there. For tax, I've got a brought forward of 18 and a carry forward of 20. So that takes care of my tax liability as well. So far, we've looked at each and every item and tried to decide where we need to put it. Any questions from anyone on anything so far? Okay. Perfect. So we are going to move on. So here, as we said, revenue, cost of sales, it's not easy to recognize where they are. That's where we take care of it through our receivables, our payables, and our inventory. Distribution, administrative expenses, it's not very clear from the details given to us in our P&L. Therefore, we will leave it further. Finance cost, 9 out of 10 times, we will always remove it. So what I'm going to do is take that finance 40 expense and put it here. So finance cost, 40. So remember, expenses, we are finance cost. We know we follow accruals basis in our P&L. Therefore, we know that all those finance costs are accruals, finance expenses, interest expense. It is not the actual money we are paying our bank. That's why we remove it. So the 40, the way we remove an expense, what do we know expenses do? Expenses reduces our profit. So if you want to remove it, you do the opposite, i.e. increase our profit. So that goes as a positive figure. Apart from that, nothing else. Tax is also an expense. However, we started off with this number, so we don't care about these. What else are we given? Yes, we're given some information that goes in our, normally that goes in our administrative expenses. And that is our depreciation. So depreciation given to me is 1242. Remember, everything we've dealt so far were in thousands. So all these extra zeros, I'm going to cancel them off so that it doesn't confuse me. So that 1242 depreciation expense will go here as well, because we know it is normally part of my administrative expenses. Expenses reduces my profit. Well, I'm trying to remove it. Therefore, I'll increase my profit. And that is 1242. Someone did mention previously that depreciation also affects my PPE. So I do remember creating a PPE working note. So I'm going to go ahead and put it there as well. What does depreciation do to my PPE? It reduces the net book value. So I'll put that as a minus 1242. If you did any questions where you did profit and loss and balance sheet, anything that comes as additional information, we always put it in two places. So just bear that in mind. In these as well, some of them will often go in two places, especially if it's something that you're dealing with in PPE land. So I've dealt with that. Then they've given me a PPE costing 5,000 with accumulated depreciation of 3,250 was sold in the year. Okay, but you've not been good enough and you've not told me how much is the proceeds because that's cash in. However, they've said a loss on disposal amounting to 812 is included in cost of sales. Oh, a loss on disposal. What do we know about loss on disposal? What is that? Is that actual cash loss? No, it is included in my cost of sales, so I need to remove it from this figure. So since it's included in my cost of sales and I need to remove it, I will put that here, loss on disposal. Okay, because loss on disposal, what is loss on disposal or gain on disposal? It is an accounting loss. It's not the actual loss you've made. It is the accounting loss. Why is it the accounting loss? Does anyone know what the formula is to find out the loss or profit on disposal? Clue is it is an accounting loss. Why is it an accounting loss? Because normally if you went to a shop and you bought yourself a couple of pencils, and because I can see some pencils in front of me, and you sold it. Let's say you bought pencils today for £2 each. In 3 years' time, you sold those pencils for £3. You would say, well, profit Gladwin is 3 minus 2. Selling price minus cost price gives me profit or loss. That's what we learned in school. Yeah. But in accounting land, our calculation for proceeds on loss on disposal or profit on disposal is slightly different. What we do here, selling price is still selling price. We call that proceeds. But instead of minusing cost, what we do minus is the carrying amount to give us the profit or loss on disposal. And that is why it is just an accounting profit or loss on disposal. Because what is carrying amount? Carrying amount is cost minus accumulated depreciation. And accumulated depreciation is just a finger in the air number. It is a number, a depreciation is everything what the business estimates will happen. It's not what exactly happens in real life, it's what they estimate will happen. So here, we've not been told our proceeds, but we've been told what our loss is. We've been told our loss is 812. Have we been told our carrying amount? Yes, we have. But they've not given us carrying amount directly. They've given me the cost and they've given me the accumulated depreciation. Cost being 5,000, accumulated depreciation being 3,250. Therefore, carrying amount is cost of 5 minus 3,250, giving me carrying amount or net book value, as we may call it, 1,750. So if I made a loss on disposal of 812, my carrying amount is 1,750. With basic maths, what would I be doing? Will my proceeds be higher than my carrying amount, or will my proceeds be lower than my carrying amount? Someone says we need to add it, i.e. add these two figures to get that. Is that what we do? So if I made a loss, that means I've sold it. The money I received is less than this. The money I've received is less than 1750. Therefore, my calculation for proceeds will be 1750 minus 812. 1750 minus 812 gives me 938, and that is the money I have received. Because if I received more than the carrying amount, I would have made a profit on disposal. And that's not what I have done. I've made a loss on disposal, i.e. my proceeds was way less than what it cost. Therefore now, proceeds on disposal is cash coming in, $938. Not forgetting, our carrying amount is what we will deduct from our PPE because we no longer have that asset. So minus disposal, 1750. So what is this telling me in total? This is telling me I had in the start of the year 12,423 pounds worth of assets. I've depreciated them 1,242, i.e. they should have reduced by 1,242, and I disposed 1,750, so they should have reduced by 1,750, i.e. they should have been worth at the year end for 9,431. But my account says at the year end, I have 15,600. How come it has increased? What do you think is the missing figure? Yeah, good. 6,169. And what would that be? So my assets has increased from 9,431 to 15,600. Spot on. We must have done some purchases. So PPE purchases 6,169. And that purchases reduces my cash. So if I write purchases here, reducing cash in minus 6,169. Perfect. Tick, that gets rid of the big PPE working. Next one, it's telling me all expenses that you notice in your accounts are paid in cash and all sales and purchases are made on credit terms. So, okay, so I've taken care of credit purchases and credit sales by doing my payables receivables. It's telling me all other expenses that you notice are all cash. Oh, wait a minute. I just removed finance cost. That was expense, I thought, but they're saying it is all cash. If that's the case, what we end up doing is not removing what we've done. However, we show that finance cost paid here. And that is what we always do. So net effect, I add it here, I minus it here. So that takes care of this sentence. And the last one, dividend paid. So if dividend is paid, that is a reduction in cash as well. Where do you think dividend paid would go? I'll give you a clue. somewhere where you see in front of the screen at the minute. Perfect. It will go part of my financing activity because it is an expense I have to pay towards my shareholders. Because I have shareholders, sadly, they will need some dividends. So dividend paid goes there as well. So dividend paid minus 100. Tick. Done. So now I've gone through the additional information and my profit or loss account as well. Any questions from anyone so far? Okay. Well, the only thing left is to finish this off. I notice I've not finished off my taxation working. What goes in my taxation working? I've got a brought forward and a carry forward. I know there was a tax expense of 22, so I'll put that in. So here, what is happening is basically I'm saying I had a brought forward liability to pay HMRC £18. During the year, I had to pay them another 22. So total, I had to pay them 40. But at the year end, I'm telling you that you only have to pay 20. What's happened to the remaining 20? So I'm repeating myself. Brought forward at the start of the year, I thought this is what I will have to pay them. During the year, 22 came up and I had to pay them another 22. In total, I am liable to pay 40. But at the year end, I'm only saying I'm liable to pay 20. So that means you must have paid. It has reduced because you must have paid it. So that's your tax paid. Spot on, everyone. And that tax paid is what will go here. So finance cost paid and tax paid are the two figures that will always come here. So now, if you total this up, i.e. take your 319 plus the 40 plus 1242 plus 8112 and minus these numbers, could you tell me what do you get as your net cash from operating activities? Have a check again of what do you get. Perfect there. It should come to 1766. That 1766 becomes part of net cash from operating in part B. And in part B, I'll look at all my workings to make sure I've closed them, dealt with them. I've not dealt with one. That is share issue. Share issue says what's happened is at the start of the year, I had 12,000 shares. At the end of the year, I have 16,000 shares. What does that mean? Why is there a difference of 4, do you think? That 4, an increase in 4 is probably an issue of shares. You must have just issued some more shares. That's why it's increased. There's nothing else. can be a possible reasons for 4,000 increase in the number of shares. Perfect. So that 4,000 is cash received. Remember, if you issue shares, shareholders are going to pay you money. Therefore, issue of shares is cash coming in. So now if I total them up, net cash used from investing activities comes to 5,231 negative, and net cash from financing, that comes 3,700 positive. And please do this calculation where you add this minus this and add that. I'm hoping it comes to 235. And it does, and I'm hoping it does. And that says we have done our cash flow. As we've still got 9 minutes, I know it's gone more than a half an hour session. I did forewarn you about it. However, let's just finish off task 2 as well. So task 2 is a smaller task because you've spent so much of time in task 1. Task 2 is smaller. All we need to do is take the figures that we have in our pro formas and put it in our statement of changes in equity. So as per our balance sheet, I know my balance at the start of the year and end of the year, which is 10,000 share capital, 2,000 share premium, retained earnings was 1,080, and that gives me a total of 13,080. And I know at the end of the year, I have 11,000 as share capital, 5,000 as share premium, retained earnings, how much is that? That is 1,277. That gives me those totals. So that's 11 plus 5 plus 1,277. That's 17,277. What happens in retained earnings? What happens here? Why I have these figures changed? As we said, there was an issue of shares, and that issue of shares happened at 4,000. We said we received £4,000 in issue of shares. So going back to our issue of share calculation or double entry that we were talking about, what do you think is my share issue in share capital, and what do you think is my share premium? Because remember, both of them, as we calculated, should come out as £4,000. Both of them should be 4,000 in total. What do you think is my share capital balance? And what do you think is my share premium balance in issue? Spot on. Yes, that is right. It's easy. What do you see? Start of the year 10, end of the year 11. Therefore, that's an increase of 1. Start of the year 2, end of the year 5. That means there's an increase of 3. And both of them together give you your cash figure of 4. And that's what we put in our cash flow. So perfect. Retained earnings. In retained earnings, our dividends are deducted from there. So I have my minus 100. And I have my total comprehensive income to go in there. Because your current year's profit is part of your retained earnings, and that is 297. So we take that and put it in. That should increase my retained earnings. Not forgetting to do the totals. 297, 4,000 minus 100. And that brings us to the end of a massive 40-mark task. Task 1 and Task 2.